Good evening. My name's Paul Beasley. I'm the Regional Account Manager for Property Valuation Services, and I had first made this presentation to Argyle Municipal Council on February the 12th, and I'll walk through the presentation for your benefit here now. Just a little bit about my background. I've been with Property Valuation Services for about 10 years. I am a Canadian residential appraiser by designation, and I've been with PVSC for 10 years, partly as assessor, also as a regional manager. But I guess the unique experience I bring to my position with PVSC is that I was a municipal elected official for some 12 years with the town of Windsor. And so, as I say, I feel that brings me a little bit of perspective into municipal operations in my role at PVSC. So let's get started. I'll go through this fairly quickly. So I'm going to talk a little bit about PVSC, who we are and what we do. We were created under the Property Valuation Service Corporation Act in and around 2000 or early 2000. We're provincially legislated as per the Nova Scotia Assessment Act. Our mandate is written out in the Assessment Act. And we deliver the assessment roll to all 49 municipalities across the province. And there are over 650,000 properties that we assess every year. And the assessment notices go out to property owners across Nova Scotia every year as well. We're municipally funded. All municipalities fund PVSC. We're a not-for-profit, and we're governed by a board of directors. The board of directors is made up of partly by professionals that have municipal administration experience. We have also private sector professionals on the board, as well as some elected municipal officials. We have approximately 135 employees across Nova Scotia, and they live and work in some 60 communities throughout Nova Scotia. So what we do and what we don't do, there can be some confusion around what PVSC does. Essentially, we assess properties in Nova Scotia, and we deliver an assessment roll to all 49 Nova Scotia municipalities for property taxation purposes. And that is our prime mandate, and we need to assess all 650,000 properties every year as per the Assessment Act. We also, on behalf of the province, administer the capped assessment program and the seasonal tourist business designation program. What we don't do, or what we don't have the authority to do, is we do not determine land ownership or the particulars of land. That's under the that's pursuant to the land registry, or the land registry looks at deals with all matters related to land. So the land registry provides us with information on each property. So we also do not set tax rates. We do not collect taxes. We do not create tax policy, and we do not provide tax relief. Anything related to taxation is within the purview of the municipalities and the province. The municipalities in particular, it's under the purview or the legislation which is called the Municipal Government Act. Property Valuation Services has no mandate in respect to taxes and tax rates. That is a little confusing to property owners sometimes, in that they don't realize there's a separation of those duties. We do assessment. Municipalities do taxes and tax rates. So how do we value properties? Under the Assessment Act, we're required to assess properties at their market value. Now, market value, the definition is here. Basically, it's an open transaction between willing buyer and a willing seller in the marketplace. It doesn't include things like, typically it doesn't include family sales or distressed sales such as tax sales or mortgage, sort of sales related to defaults on mortgage or anything like that, because those typically aren't Open market sales, they typically have some type of undue influence or motivation in order to sell them, possibly a little bit quicker than they might if it was on the open market or at a reduced price, for instance, if it's a family sale. So market value is a key. And we value, our market value is prescribed to be at a base date, a point in time. So for the 2026 assessment roll, which was just received by by the municipalities and the notices received by property owners, the base date is 1 year back, essentially. So the 2026 assessment notices are based on a market valuation date of January 1st, 2025, essentially 1 year back. So what we do is we collect market data, in particular sales data. We review it, and we review it right up to January 1st, 2025, or we collect it right up to January 1st, 2025, and then we review it to create the tax roll for 2026. So we use that 1 year period in order to review some 35 to 40,000 sales each year so that we can determine exactly what is occurring in the market, and the assessments reflect that. We don't set the market values. We just look at past history or the past sales that have actually occurred to determine what the market value movements are. Also, what is also important in regards to the assessment roll is what's called the state date. So that is the date that reflects, or we make sure that the roll reflects the state of the property as it existed on the first day of December each year, immediately before the assessment roll goes out. So what does that mean? It means we collect data on the property, such as for permits and new construction and upgrades and renovations, right up to as close to the assessment roll as we can. So market value date is 1 year back. However, we continue to collect the data on the properties right up until the point where we can get them on the assessment roll for 2026. So the state date for 2026, December 1st, 2025. Also, we use the practice of mass appraisal. We use it to determine the value of all the property in Nova Scotia. As you can appreciate, with 650,000 properties, we don't see every property every year. There are not sales on properties every year. So we use mass appraisal, which is internationally accepted process for doing assessments, around the world, essentially. So it's the process of valuing a group of properties as of a given date, which is essentially the base date that I spoke about earlier, using standardized methods and statistical testing. And the assessments are based on market evidence, as I had indicated before. It's based on sales, and for some properties, it's based on financial data. So we do not set the market, we reflect it. So we also have accuracy, measures of accuracy, uniformity, fairness as well, which are established, are internationally accepted, established by the International Association of Assessing Officers. Also, we adhere to CUSPAP, which is Canadian Uniform Standard and Practices, under the Appraisal Institute of Canada. So we have three approaches to determining value. By far the most common and most widely used is the sales comparison approach. We use a sales comparison approach for your typical residential properties, and vacant land, things like that, around the province. So we analyze sales, determine what is happening in the market, and we adjust using mass appraisal principles. We adjust that in neighborhoods so that comparable properties are adjusted similar to other comparable properties based on that sales evidence. We also use the income approach. The income approach is used for a more specific market, which is essentially those properties that are transacted based on the income flow that they produce, things such as hotels and motels, things such as office buildings, which rent out spaces, things such as strip malls that rent out, the areas within their building, apartment buildings, those types of things. So they transact based on the amount of money they can generate. And so we do reach out for financial statements on these specific properties every year. And we do, we do assess them based on the market evidence that's provided or that we collect and convert that income into a market value. And there's the cost method that would be typically used for more unique properties around the province that don't transact very often. So if we don't have sales, enough sales to show us which way the market's going, we use sort of market adjusted costing methods to do that. It's for things, some good examples are there's many fishery related plants and that around the province, or even the big box stores that are constructed and owned by some of the big box companies. Those types of things we do on a cost method, warehouses, industrial uses, those types of things. So I spoke of sales data and, sort of the market, looking at the market. So we receive all the sale information from the Nova Scotia Land Registry. All of it flows through the Land Registry. They provide us which properties have sold. So we review all those sales to determine if they meet the criteria of an open market, arm's length transaction between a willing buyer and a willing seller. And we use various ways to get information on these properties, real estate listings, aerial pictometry, site inspections, but we also contact seller and buyer to determine, what are the specifics of the transaction in order that we can do a thorough review of it. And if they meet the criteria of an open market transaction, we use those sales in our analysis. So, sometimes when there's not a whole lot of sales in an area of similar properties, we may go out a little farther as far as geographically looking a little beyond the boundaries of, say, a neighborhood or even a municipality, especially if it's a unique property. There may be, I'll use the example again of, say, a fishery related processing plant or something like that. If we don't have those types of properties in one community, we may have, or if we don't have sales with them in a community, we may look further abroad in Nova Scotia to see how they're transacting, what the values are, those types of things. So I think that will do for that, sort of discussion on sales. So the capped assessment program, PVSC receives a number of inquiries on the capped assessment program. It was introduced in essentially 2005, places a cap on the amount that the taxable assessment for the eligible residential property can increase year over year. Essentially, it was to protect against large spikes in market value. If market value went up by a large spike, it would cap it so that it would not go up beyond a certain amount. When it was originally introduced, the cap was set at 10%, so it wouldn't increase beyond 10%. Now the market value still increases, but the cap value only is calculated based on that percentage increase. So a few years after it was introduced, it was adjusted or changed such that the cap would be based on the Nova Scotia CPI, Consumer Price Index. So in 2026, in the green bubble there, you can see that the 2026 CPI was 2.6%. So essentially properties that are eligible for the cap and had no other changes to the property would essentially be, would go up by the CPI. The cap would go up by the CPI rate of 2.6%. So essentially that would be, the current cap value or cap value from previous years, add 2.6% to it. That's your new cap amount. Now the cap and the market value are not equal, as I'll talk about here in a little bit. So you can see some historic cap rates down that right-hand side in the sort of at the height of the pandemic. The CPI was at 7.7%. So in that particular year, the cap went up 7.7%. Typical property assessment for a residential property, straightforward residential property, is shown here on the screen. I guess the two things that are important here is that there's an assessed value, which is the market value assessment, which I spoke about earlier, and there's the capped assessment. The capped assessment in this case is 114,500, which is almost, half of what the market value assessment is. I would glean from those numbers that this property has been in the cap for a while, and that difference between market has been increasing, where market has been increasing more than the CPI has been. So over a number of years, the cap has been, the calculation has set the value at a much lower amount. And this property owner enjoys a fairly significant cap benefit in this particular case. So the legislation requires that the municipality tax the property based on the lower of the two values. So in this case, the taxable assessed value on the right-hand side would be equivalent or equal to the cap, and the taxable amount would be that amount, and that's what your tax bill would be based on. So some numbers for Argyle for the 2026 assessment roll. I'm going to start in the left-hand column, which is labeled as 2026, so the current year. That total assessment roll number of $1.183 billion, that includes commercial assessment. It includes all of the commercial assessment, the residential assessment, and resource property assessment. It includes all those properties that are exempt from taxation as well. And it is at market value. All the assessments at market value totaled in that total assessment roll. So let's peel back the layers of the onion a little bit here. So if you go down below the total, you'll see total residential. So this number, the 1.046 billion, represents total residential classified properties plus total resource classified properties. And so you can see that the vast majority of the Argyle assessment roll is represented by residential properties. If you go right down to the bottom, you'll see that total commercial property assessment is 136 million, a fairly small component, or maybe give or take 10, 11, 12% of the total assessment roll for Argyle is commercial assessment, commercial properties. So the other number there, the adjusted total residential with cap applied, kind of shows the cap impact on the roll for Argyle. So you'll see it's 790 million. So the difference between that total residential and the total residential with cap is 1.046 billion versus 790 million. That's essentially the impact of the cap, the difference between market value and the cap value over the years that the cap has been in place. So in this case, it's a little less than $300 million is the cap impact for Municipality of Argyle. Also, I want to point out along the top line, the total assessment roll, the difference between 2025, or the assessment list between 2025 and 2026 for Argyle this year, was about 6%. Now, if you look at sort of the total residential roll, actually, if you look at the total roll over the 5 years from 2022 to 2026, along that top line, it's about a 52% increase over 5 years. If you look at the total residential roll, it's up about 60% because bigger components, residential's been increasing more than commercial has over the past year. So about 60% increase over those 5 years. If you look at the cap over the past 5 years, the cap adjusted residential with cap over the years, it's up only about 28% over the past 5 years. So kind of that spike protection is built in there. And the impact is, rather than having an assessment roll with a 60% market increase over the past 5 years, when adjusted to cap, it's a residential roll with a 28% increase over the past 5 years. So I'm going to take a look at some of the numbers as well here on sales. So when I talked about us reviewing sales to determine which way the market is moving and which way assessments should move within the municipality, we qualified or we reviewed sales, and the ones that we found to be that met the criteria of being open market sales and arm's length sales are the ones we use in our analysis. So over the past 5 years, it's been fairly stable, the ones we've used in our analysis. However, at the peak of the pandemic, you can see it jumped up to 264 qualified sales during that year and has since returned to pretty much normal levels right around, 170, 175 again for 2026. So we're kind of coming down off of that pandemic bubble. Number of permits, so sort of construction activity within the municipality. It took a jump this past year through the calendar year, 2025. But typically, 145, 175 for the municipality. And number of appeals received, as you can appreciate, in those years where the values were going up the most, sort of towards the end of the pandemic, we did receive more appeals across the province. So this is fairly similar for other municipalities in the province, but typically there would be 40 to 50 appeals within the municipality of Argyle in any particular year, notwithstanding the higher increases during the pandemic. So the appeal process, the appeal period has closed about 2 weeks ago. When each property owner receives a notice of assessment, they receive those in mid-January. It indicates the value. Once again, we have this example of the value of the property. So when a person's contemplating whether they should appeal or not, the value that they would be appealing is this assessed value, which is the market value. So in this case, you can see it highlighted 226,800. So if the property owner disagrees with that value, they have the right to appeal under the Assessment Act. They can appeal every year within a 31-day period of the notices being mailed out. So I just want to point out that the assessed market value is what you're appealing. So in this case, where the capped assessment is much lower than the assessed market value, this particular property owner, in order to receive a benefit as far as taxation is concerned, they would need to appeal and hope that their appeal would be adjusted down below the capped assessment amount. So essentially, it takes the lower of the two if it's adjusted. So unless it's adjusted below the capped assessment amount, they'll still be taxed on the capped assessment amount. So sometimes you may appeal, you may get an adjustment. It may not impact your taxation status at all because the cap may be lower than the adjusted amount after you have done your appeal. So this year, all appeals needed to be received by PVSC by February the 12th. Any appeals received after that are considered late appeals. So there's 3 levels of appeals. So if we receive it before February 12th, the first level of appeal is a PVSC initial assessor review. So the assessor will take that appeal. They'll look at the property, they'll look at the data. They may or may not reach out to the property owner, and they'll make a decision as to whether the value should be confirmed as being the value that it already is, or the value doesn't change, it's confirmed, or the value can be adjusted, or the property owner can withdraw their appeal one way or another. So in Argyle, during the previous appeal period, about 67% of all appeals were either confirmed or withdrawn, and about 31% were adjusted for whatever reason. Possibly, we had it down as a 2-bathroom house and it was a 1-bathroom, or maybe we had it in as having basement finish and they removed the basement finish. One of any type of thing, it could relate, adjustments can relate to any number of things. So essentially, once that review is done, property owner gets a new notice. And then if the property owner still disagrees with the, sort of the revised notice or the confirmation notice, they can continue to a second level of appeal, which is the Nova Scotia Assessment Appeal Tribunal, more commonly referred to as NSAT. It's an independent body. It's independent from PVSC. Typically, a hearing there would be a chairperson who would typically be a lawyer or a mediation expert. And that chairperson would hear from the appellant, property owner, and then they would also hear the case from Property Valuation Services, and they'd make a decision as to what they felt is correct or fair or within the legislation, that type of thing. They would make a ruling. Once again, that ruling would be advised to the property owner and the municipality. If the property owner did not agree with the NSAT ruling, they could they could take their appeal forward to the Nova Scotia Regulatory and Appeals Board, also known as NSRAB. So they could do that. It's rare. It doesn't happen a whole lot of times, and it's a much more formal type of appeal. And but they do, property owners do have that availability under the Assessment Act. So finally, our contact information, anybody that's listening or viewing this presentation today, if you have any questions on any of this whatsoever, after sort of me going through it for you, feel free to reach out to our 1-800 number. We have a call service, call center. And we also have assessors on call as well, so that if it's a question about your assessment, you can call any time of the year. And if you decide, or if you feel that there's something inaccurate, or you just have questions about how it's done or how we assess and that type of thing, feel free to reach out at any time at that 1-800 number, or you can send an email to us at inquiry@pvsc.ca. And, other than that, last year during the appeal period, just a little bit of information on numbers. We responded to over 10,000 inquiries by phone and email last year in the 2025 appeal period. I don't have the numbers for the 2026 appeal period, which just finished. However, the average wait time last year before speaking to a PVSC staffer was 16 seconds. So we put a lot of effort into having reducing wait times and making sure we have people available. So feel free to reach out to us. And finally, thank you very much for taking the time to listen to this presentation. It's been my pleasure.